because we have an amazing show for you today. I'm so excited. I can't tell you how excited I am for this session. That really, I can't tell you how grateful I am for you to spend a little bit of your time today with me. Thank you so much for attending. This is the Social Finance Forum BC edition. My name is Tim Nash. I'm your host for today. I'm the founder of Good Investing. I spend my day nerding out on sustainable investments and helping regular, everyday people figure out how to align their investments with their values. We have an amazing show for you today with 3 incredible guests. It's hard to believe that the Social Finance Forum was way back in June. I want to say that was like 6 months ago. Part of me feels like it's been a week. The time has flown by. Part of me feels like that was a whole year ago, but nevertheless, it was 6 months. I'm sure many of you attended, but even if you didn't, no worries whatsoever. We're thrilled you could join us today. Since then, I've been so inspired by what I'm seeing in British Columbia within the social finance ecosystem. So really today is about shining a spotlight on that. Before we jump in, I do want to say a big thanks to Tapestry Community Capital for sponsoring this event, and really they are the reason why we're here. Tapestry's mission is to provide social purpose organizations with access to capital, enabling them to achieve greater scale and impact. They do this through community bonds, which you're going to be learning more about today. One of the great guests, Lindsay from Propolis, is going to be teaching us a little bit about community bonds. Tapestry offers a full service solution to nonprofits and co-ops that allows organizations to efficiently use community bonds to achieve their funding goals, usually within like 6 to 10 months, which is pretty incredible. Reach out to Tapestry if you want to learn more. We will be sending out an email after this with links I'm going to throw the video up on YouTube, and we'll have links so you can connect with all these wonderful organizations. But definitely, please reach out to Tapestry if you want to learn more about community bonds. But let's jump into it. So my first guest is Kristi. Kristi, are you there? Amazing. Hello, Kristi.
Hi, Tim.
Thank you so much for joining me today. Let me just kind of set this up that you're with Thrive Impact Fund, and Thrive Impact Fund invests in and supports impact organizations and social enterprises across British Columbia that are generating positive social, environmental, and/or cultural benefits. So you are managing director at Thrive, and I'm super happy to have you here at the top of the show, really to help us understand the ecosystem, kind of set the stage for us, for the other wonderful guests that we've got, because you've been working in the social enterprise ecosystem basically like your entire career. When did you decide to work on the finance side of things within social enterprise?
Yeah, I think that's a great question. Thank you so much. I'm going to say the start of it was when I was operating a social enterprise in Vancouver in 2003. So this is a long time ago. And the social enterprise was doing really well. It was growing, and we went to go get financing. And the financial institution that we tried to get financing from requested that the volunteer board members of this nonprofit social enterprise put up their houses as collateral.
Wow.
And I had a moment where I thought, here we have a growing social enterprise, and just because it's a nonprofit, it was deemed as risky. And so there was a way of trying to hedge that risk. And from there, I began to look and see at how many different ways that capital has barriers to nonprofits, to co-ops, and even to for-profit social enterprises. So from all that experience, took a number of years to think about how do we begin to fill that gap? How do we provide capital that removes barriers and increases the access to capital for organizations that are ready to grow?
Amazing. I love it. All my work in the nonprofit sector, have definitely seen such a struggle for financing. And that, compared to my work in public markets where, companies can just raise money, it feels like almost at the drop of a hat. Like it really is an entirely different world. So I'm so happy that you kind of learned that hard lesson for the rest of us and are now absolutely part of the solution. Now for today, with the other 2 guests that we've got today, we're going to be looking at 2 different impact models. We're going to be looking at community bonds, and we're going to be looking at angel investing. Now, these are 2 sort of different approaches when it comes to social finance and raising money. Community bonds are more about debt, whereas angel investing is more about equity, where we're sort of, supporting them through that. Can you explain the difference between equity and debt in social finance?
Yeah, so both of those finance tools are connected to structure. So community bonds are only allowed to be used by nonprofits and cooperatives, and equity is only allowed to be used by for-profits. So depending on your organization and how your organization is structured, you have access to different types of financing tools. So there's opportunities and challenges with both of those. I would say, like for Thrive Impact Fund, we invest across all incorporated structures. We invest in for-profits, charities, cooperatives, and for-profit social enterprises. So we've really had to look at how do we create tools that are accessible to all those incorporations, all those structures, but do what equity is really good at. So debt tends to be backward looking. It tends to be very traditional. It tends to look at history, and then it looks at what your revenue is. And what equity does well, which is sort of the gap that debt provides, is equity provides patient capital that is long-term and allows an organization to kind of grow. So we looked at how do we make debt act like equity? How do we create a flexible debt product or a revenue-based financing product to allow organizations that don't have access to equity, or for-profits that don't want to have dilutive funding or need something else in their financial mix, be able to have flexible tools that are also forward-looking? And so that's where it's interesting in all organizations that we look at. We're like, what is the right kind of capital that's going to help your project succeed? And ideally, we create a social finance ecosystem that allows this blending of non-repayable capital, such as grants, alongside traditional debt, alongside flexible debt, alongside quasi-equity. And if you do have a for-profit that's a fit for equity, you can access that too, so that we begin to think holistically about our continuum, and each project begins to think about what's the mix and how do I bring in all these different types of capital in order to make what I'm doing succeed.
I love it, because there is no like one silver bullet when it comes to this stuff. There's never going to be one financing solution that works for everyone, does that. So, really wanted to highlight a couple different models here. From an investor standpoint, I tend to think about debt versus equity, whereas debt is a little bit more sort of the turtle in the race. We're earning interest very consistently every 6 months or once a year kind of thing. We're getting that. Equity can be a little bit like the rabbit in the race, where it's a little more volatile in the short term, but certainly over the long term, I think there is more potential here. Why is diversification so important? Like, from you running a fund, from the investor standpoint, why do you want to invest in both equity and debt models?
Yeah, so as Thrive Impact Fund, we don't use equity as our structure. We will invest alongside equity or venture funds, and that's really great. And equity is great makes your balance sheet really good, like really good when someone has equity in. It also de-risks debt. So if you're a for-profit and can get equity in, it helps balance it out, and it brings in your debt financers. So together they work really nicely together. For organizations that don't have that ability to access equity, it's like you really got to kind of look at that balance sheet and look at what's the terms that you want to do. And that's where creativity really comes in. And I think community bonds are beautiful in being able to bring like an equity-like debt product into the nonprofit and charitable sector, which don't have the ability to access pure venture capital. But these are the kind of things that are super interesting is different kinds of products and innovation. And I was in a conversation earlier that's like the financial sectors, we're only harnessed by our lack of imagination. Like, there is a ton that we can do in the imaginative space between traditional debt and equity. There's this middle space that's evolving out that allows us to think about how do we use capital to be catalytic, to be patient, to blend with other types, and to be able to, again, like wrap around a project to make it happen and grow, I think to the benefit of us all.
Amazing. That's so awesome. I was looking through your news releases, and I actually saw that you recently made a $270,000 commitment to Propolis, Cooperative Housing, who we're going to be speak to. They're going to be talking to you. Made an investment there. What goes into that decision? Like, how are you doing it? This blended finance, where there's the financial piece of it, there's like the impact side, or what I call the warm fuzzies. Like, how do you approach that decision?
Yeah, and so we approach it with, first of all, like the process is a lot of conversations to really understand a project and understand where the gap is. And because we're an exempt fund, we have high flexibility in being able to fill that gap. So the gap with Propolis that we saw is they have this ability and opportunity to purchase a property to do this amazing, cooperative and affordable housing project. But that time frame to purchase a property is a little shorter than the time frame to do their community bond raise. So we're like, okay, so we have that flexibility as Thrive Impact Fund to say, how about we come in early, help you secure that property, which then also then helps support the community bond raise. And so we're providing, essentially a bridge fund and in between gap filler as they reach into their community and raise in that way. And that's the way that Thrive works, is we look at it and we're like, what's the project need? What's the type of financing that's going to make it happen? Who's the other partners that we can partner with around this? And then how do we just kind of, I'm going to say, like, I don't want to use the oil the gears or whatever, because I'm trying to move away from water, the ecosystem, so that these things that we know are amazing and needed in community can take place and happen.
Absolutely. Absolutely. We can facilitate the flow of
Thank
capital.
you. Yeah.
Absolutely. We can build a canal or a channel straight into impact. When I started my career, I often talked about the river of money and how the river of money was flowing towards unsustainable activities. And so much of our work, I think, is about really rerouting that flow of capital so that it is flowing into organizations that are purposeful, that are having that impact, which is amazing. And so I love the work that you're doing. Like, I'm such a huge fan of Thrive Impact Fund. So explain to me, what is your vision? What are you really trying to create? Obviously there's this notion of watering the social enterprises and the organizations that are there. How do you know that you're succeeding?
Yeah, I think our vision and our success metrics are on a few different levels. So I would say, of course, at the very base of it is that we're investing in great organizations, great entrepreneurs that are doing amazing things in community and solving real challenges that we're facing currently, and that they're making a difference so that those entrepreneurs are successful. And so we want to see good projects growing. We provide wraparound supports. We're building a community of those entrepreneurs. We also want to really demonstrate that small funds like ours can be profitable and impactful. And that's a challenge in the financial system that wants everything to be bigger and bigger and bigger. And we know that the type of investing we do is in community, in relationship, and that needs a smaller kind of scale. So we really want to show that this kind of investing is important and critical to the ecosystem, and it makes economic sense. I think on the bigger level, we want to see more money invested in local communities. We want to see more money invested in women-led funds and other equity-deserving group-led funds, of which is less than 3% of all funds. So we need to see that shift in flow of capital. We want to see more catalytic and flexible investment being made, where we're allowing patient capital and blended finance to take place. So we want to see that more, which is not happening that much in Canada. So we really want to see and demonstrate that this can happen. And we really want to think about where power shows up in the financial system, who gets to make decisions, who benefits from the successes that take place, and to really think about, going back to my earlier story, think about the place where risk takes the forefront rather than impact. So the social enterprise that I was running, the bank said no because they didn't understand a nonprofit model and felt it was risky, and it stopped our organization being able to grow as fast as we could have and make more impact in what we were doing. Yeah. We got there in the end, but that financial decision landed in one place, and we want to see a bit more of a shift into our dollars going to create impact in our world.
Amazing. That's just so cool. Well, I'm such a fan. I wish you the biggest success with your fund. I always say that, there's a real skills gap when it comes to social finance and sustainable finance. And I always say that it's easier to teach someone, from the impact world, finance, than it is to teach someone from the finance world, impact. And I think you, to me, are sort of case in point for that with your experience, it just shows how kind of, heart-centered you are with this, that it really is about helping these social enterprises thrive and grow, and empowering them to be able to create the change that they're already doing, just on a larger scale. So thank you so much. Kristi is Managing Director at Thrive Impact Fund. Thank you so much for joining us today, Kristi.
Thank you, Tim. Thanks everyone for turning up.
Amazing. Awesome. So before I welcome Lindsay Harris from Propolis, just want to let people know that unfortunately I wasn't able to get the chat working. I apologize. I wanted to see all of your witty comments in the chat, but there is a Q&A feature. So if you have specific questions, by all means, throw them in. I've got a jam-packed session for you, and I kind of promised people that I would get done by the end of the hour. So, I'm not going to spend too much time on Q&A, but by all means, and, feel free to put questions there. I did see a question there about whether things are eligible for RSPs and TFSAs and all that fun stuff. Know that that's a question that I deal with. I am a certified financial planner. So if you did want to reach out to me to talk about your own personal investments, I won't address it in on the webinar here, but know that that's something I'm happy to chat with you about. But Lindsay, can I get you to join? There you are. And okay, great. Awesome. How are you doing today?
I'm doing so well.
Yay. Well, thank you so much for joining me.
Yeah, I'm really excited to have a chat.
I love your organization. I've been talking about Propolis for a very long time now. For those who are unaware, Propolis Cooperative Housing Society is building a net zero housing co-op in Kamloops and financing it with a community bond, which is super cool. So joining me is Lindsay Harris, president of Propolis. Thank you so much for being here. Really, before we kind of jump into the bond stuff, I just want to kind of like take the pulse of, what things are like in Kamloops. We're in a housing crisis across the country. Here in Toronto, it's terrible, but I think it really is across country, this housing crisis. How is that impacting your community in Kamloops?
Yeah, I think Kamloops is experiencing what almost every community in the country is, a really widening affordability gap in our community. We have our rents are skyrocketing, our vacancy rates are rock bottom. So housing it's not affordable and it's barely even available for people. And we're really starting to see the ramifications of that in, kind of increasing polarization in the community from those folks who have stable housing and those folks who don't. And at the same time, Kamloops is also experiencing the impacts of the climate crisis, where, our region has been heavily hit by wildfires, flooding in recent years, and Kamloops has been a host community to a ton of evacuees. And so we're sort of seeing how the affordability crisis, the housing crisis, the climate crisis, those things are all interconnected, and we need to take a systems level approach to addressing them.
I love it. And, I often talk about now the idea of a polycrisis, that, we're not just kind of one crisis after, it's like multiple crises happening at the same time. And so if we're living in the age of polycrisis, then we need poly solutions.
We totally do.
Exactly what you're providing. So what was the inspiration to start Propolis?
Well, we really saw that cooperative housing is such a great tool to ensure affordability for housing over the long term. And it was a tool that was being really underused in Kamloops, really underused across the country. But we didn't have any other organization in our community that was looking at developing new affordable cooperative units. And so we really wanted to step into that space. And so we've announced that we're in the planning stages for our first project. It's going to be a 50-unit building in the heart of Kamloops North Shore. It'll be a mixed-use building, so it'll have a community performing arts space and a daycare and some other commercial space on the main floor, 50 affordable units above. All of those residential units will be net zero. So, again, it's that poly solution, right? It's like looking at how integrated the crises are that we're facing and how we can build a project that's really going to make a difference.
I love it. I mean, obviously, this is so needed. And of course, we end up with this question, well, how are you going to pay for it, right? Which to me always was the question that drives me nuts. And now we have a wonderful solution, which is community bonds. So please explain to us, what is a community bond?
Well, I think that you and Kristi have done a really good job so far of kind of hinting at what a community bond is. It functions very much like a traditional bond. It's an interest-bearing loan with a fixed term and a fixed interest rate. But from our perspective, a community bond is a grassroots community-led financing tool. And we really love how flexible and how nimble it is. Our organization was able to look at the project that we needed to finance, look at what our needs were, look at what was a sustainable interest rate for us to be able to pay back, look at where we could provide our investors security, where we're purchasing our first property, and that property can provide that security to investors to know that there's an asset that's backing their investment. So it's a really flexible tool, but from our perspective, it's really that idea of the grassroots and getting our community involved in being empowered to contribute to finding a solution to the housing crisis alongside with us.
Absolutely. And now I imagine, like, I'm not certain about this, but I imagine you don't have a background in finance.
I don't at all. No.
What's been your learning journey? Like, I imagine you come to this role and you're like, okay, we need to finance a 50-unit real estate project, like kind of probably a bit of a crash course. Can you share your learning journey about community bonds?
Yeah, I mean, it has been such a steep learning curve. I come from a background in community economic development, though, and so there's so many transferable skills there, where I'm like, this is a tool to engage our community. This is a tool to create like these affordable housing developments need such a diverse financing package. You need a capital stack, and you need a whole range of tools to be able to make them fly. And being able to start with a community-led initiative as the first financing that we're securing, really what it's done for us is it's opened doors to other financing streams in the future. So once we have the property purchase finalized, once we've acquired the property, we can move forward with the other major financing streams for these type of projects. But know it, like, we've shown that we're a credible organization, that our community is backing us, and that's it's really empowering to be able to walk into a funder's office and say, look at what we've raised from our community, look at what we've done, and here's where we want to go.
It's those first dollars that are always the hardest to get, right? Like, it really is like the first people that are going to put up the cash to get you started. We call them often anchor investors. That's the people who really, I think, as organizations, we love the most, are those people willing to step up. I just love it. Now, I saw online you're raising 1.1 million with this offering. How much have you raised so far?
So of our 1.1 million, we're over 600,000 in pledges and investments. So that's really exciting progress. And then of course you've heard that we have a short-term loan from Thrive Impact Fund of $270,000. Which comes alongside the bonds, and it's going to allow us to acquire the property sooner. Which is great because we want to get building sooner. And it's also great because it gives our investors more security as soon as we've got that property purchase finalized.
Incredible. So I'm hearing like 870K out of the 1.1. Is that right?
Yeah. So we're very close. We hope that we're on track to complete that property purchase by next month.
I love it. Well, I always find with investors, for me, there's a funny psychology where, again, it's hard to be the first one through the gate. Those are the people we love the most, are the ones who are like the first through the gate, like, here, take my money. But what I find is that it's often like there's a bit of FOMO at the end where, people, they don't want to miss out on it. So I would really encourage people, they're almost there. I'd have to do the math on that, but I think sort of 75, maybe 80% of the way there. So, make sure you do check it out and consider investing before it's too late. There is a very low minimum investment amount. It's just $1,000 to buy a bond. That's sort of a very, reasonable starting point for an investor. Why is it so important to keep it accessible?
I think it was really, really important for us in the planning process when we were thinking about who would want to invest with us, who would want to come alongside the project and support. And we really wanted it to be very inclusive and very accessible so that really anyone in our community who's in a place to invest even a little bit of money has the chance to feel like they can make a difference to the housing crisis. When I think of our youngest investor is 16 years old, scraped together $1,000 of his own money, put it into the project and said, we asked him, like, why did you choose to invest? He's like, I think that Propolis is a project that's going to help to make the world a slightly less dystopian place. And I'm like, I really want, our like youth can invest in that. I'm like, really want to give people like that the chance to feel like they can make a difference in their community.
Yeah, no question. There's been so much talk about greenwashing in the world of sustainable finance over the last couple of years, and kind of ESG has dominated this idea of environmental, social governance. And, I play in that world a lot with, public markets. I refer to it as doing less evil, and it's brought out a lot of cynicism in people. And it's like, because there is some greenwashing there, absolutely. And, it's a lot trickier. But when it comes to this, doing more good stuff, like, there's no question that the project that you're doing is going to have such a positive impact right? Like it's absolutely incredible. I love, you know, when people learn about this for the first time and they're just like, oh my goodness, you know, this is such a cool thing. I didn't know that I could buy a community bond. So I love that you've made it accessible. You know, I think $1,000 to me, that's a really good minimum investment amount. And, you know, I think probably, I imagine for you, like, it's really cool to watch people come on board. Like, how does it feel for you emotionally when someone you know, or someone you've met tangentially, but someone's like, okay, like, I'm actually going to cut you a check and I'm actually going to invest and make my first impact investment?
Right now we have 60 investors on board already, and I feel like I celebrate each one. You know, it's so important to be inclusive and to bring people on board with that. And you know, you're talking about greenwashing. I'm like, it's not possible to greenwash a community bond campaign, because
Right?
it's, you know, it's us. We're residents in the community. We're out there, you know, standing at a table at the farmers market, reaching out to people. You know, it's our friends, our neighbors, our colleagues who are hearing about the project and choosing to invest in it. And you know, they know us, and we have, you know, we have a weight of responsibility, I think, to be you know, responsible with the investments, to, you know, to be diligent that we're mitigating whatever risks might be present for people, that we're, you know, offering as secure an investment as we can, which thankfully for us, the project is backed by the purchase of a really, you know, really great property. So we're able to offer people that, you know, but I'm like, I want to celebrate everyone that's supporting the project so much.
Absolutely. I think it's a pretty cool feeling. I always love it as well. I get to experience when people get their first interest payment from a community bond. They're like, what, money just came into my bank account from this investment? Like, I'm doing this to, you know, to do good in the world, and I also get an interest payment. This is so cool. So I love it so much. I'm noticing some questions coming in. I'll try to get to them kind of like between speakers a little bit. But if you do, Julie, I can confirm that we are going to send you a link to the video afterwards. So don't stress if people have to leave early, no problem. We will be able to provide that. So the last question that I've got is really to understand the scale and scope of the housing crisis. Like, this is a massive problem that we're facing right now. And as laudable as like 50 units is, right? I think we can both agree that this is sort of scratching the surface.
It's a drop in the bucket.
Problem. But this is, I feel like for so many people, this is the first time they're being exposed to the co-op model. This is the first time they're maybe stepping into a net zero building. And for so many people, this is the first time they're hearing about community bonds. So what is the potential for community bonds to help with the housing crisis?
I think it's really significant. I think there's really significant potential. And I just want to give a shout out to Tapestry Community Capital, who I feel is an organization that's really leading the charge on this front, and is supporting a number of pilot organizations across the country to use community bonds for affordable housing. And you know, Propolis, we're grateful to be one of those organizations that's working with Tapestry. But you know, for Propolis, our mandate, we really want to build a network of multifamily buildings. We want to keep building housing in Kamloops. We've announced our first project, but we want to leverage that to a second project and a third project and a fourth project. And so really investing in, you know, understanding the learning curve of community bonds. It's a challenge to go through it the first time, but we've learned so much. And what we feel is that we're really building what could be a replicable model that we can use again ourselves for a future housing development, a future project, but that other organizations across the country could use too.
I really think we're just getting started on this. I think that, to me, there's such a need for, I'm going to call it social housing and kind of like non-private housing. There's a question in the Q&A, you know, asking how big is the impact on the Canadian housing market for allowing investors to purchase houses as an investment class, right? And I think this really speaks to the problem that it's been the privatization, the securitization, the financialization of housing, which is, to me, a fundamental human need, right? But it's really, you know, we've gotten rid of the government investment. There haven't been new co-ops built, or these, you know, it's been left to the private market. When we've like negotiated for affordable housing, it clearly isn't working. So I think we absolutely need more of what I'm going to call social housing built. And that, to me, the question is always going to be, well, who's going to pay for it? And, you know, with the political climate where it is right now, it's really hard to imagine government having a huge new line item or, you know, raising taxes by huge amounts and hoping they'll still get reelected. So to me, I really think that this model is just so gosh darn cool.
It's so, so important. I think, you know, the financialization of housing has been devastating, and we really need to take an approach that housing is a human right and that we need housing for all. I totally agree with you that we need more non-market housing. And I think that, you know, a community bond for a housing project is an ethical way for someone to invest in real estate. You know, I'm like, let's not treat our houses like investments. They're homes, and housing is a basic need. It's a human right. And if you want to be investing in that realm, why not try a community bond that's issued like by an organization like Propolis?
I love it so much. There are a couple other questions in here that I might kind of let you sort of answer them in the Q&A if you're able. I saw Kristi answered a couple. There's someone's asking about a transfer agent solution. I have no idea how that would work. Tammy's asking whether the property will include energy efficiency in its construction. And I think, yeah, it's net zero. My understanding is that energy bills are going to be very low after the fact, which is amazing. What interest rate are you paying on the community bond? My understanding is that it ranges from 2.5% a year to 3.5% a year, depending on how much you're investing. Do I have that right?
You've got that right. Yeah.
So good at this. And that, you know, and that to me, it really is understanding, yes, that is a below market rate. Like we can get a GIC or a high interest savings account for more than that right now. But I really want to remind people that when it comes to impact investing, that this is really about impact first, that I wouldn't compare this to, you know, a GIC or a profit maximizing investment. To me, this is more like almost like, I don't want to say quite a philanthropy type thing, because that sort of got a negative 100% return, like you're sort of losing that. This is, I almost consider it like recyclable philanthropy, where you can invest your money, you get, you know, 2.5 to 3.5% every single year, which hopefully you can reinvest in other impact investments. At the end of the term, you know, you'll have the choice about whether you want to reinvest or not. But I think most people do end up opting to reinvest, which is really, really cool. Is it a 5-year bond? I think it's 3 years.
We have a 3-year term.
A 3-year term is my understanding. So I know a lot of them are 5 years, but I think Propolis is doing all of them at 3 years, which I like, a little bit shorter duration on that. And then Darren is asking where community members can invest. So if people want to invest, what's the website that they go to?
Propoliscooperative.com.
Okay, perfect. So, and again, everyone's going to get an email as soon as I have a chance to upload this video to YouTube. You're going to do that. We'll have little pieces there. I see some more details in here that, you know, someone's asking for more details. Lindsay, maybe you can answer that. I do want to keep us moving along. But there is, you know, I know that Tapestry does play a really key role in terms of administering the bonds. So collecting people's money, paying out interest payments. They've got a very sophisticated system. There's even a portal that I can log into to check out my impact investments and when they're coming due. So, you know, certainly happy to provide more information there and make sure that people have every question answered before they are ready to invest. Thank you so much for joining me. I can't tell you how inspired I am by your project and your progress. Lindsay is president of Propolis Cooperative Housing Society. Thank you so much for being here today.
Thanks, Tim. Thanks, everyone.
Amazing. Okay, great. We're going to keep moving right along. I'm on track. I'm doing well with the timing. Ashima, are you available to jump on? There you are. Fantastic. Thank you so much. I'm doing great. This is fun. I thrive in this environment. I get to talk to like 3 really cool, amazing people about something that I love. And, you know, to me, this is certainly the funnest part of my day. And you're involved, like you are just, I love what you do. It's been so cool. I've been following it over the last little while. That I'll just, for people who aren't aware of Spring Activator is a global incubator, accelerator, and advisory firm that helps impact entrepreneurs, investors, and ecosystem builders drive regenerative development and build thriving communities. Ashima is an investment program manager at Spring. Welcome. Thank you so much for joining me.
Thank you for having me. I'm excited.
Yeah, it's really cool. I'm excited. I've been following, the work that you've been doing. You just finished doing a little bit of a challenge. We're going to talk about that in a little bit, but I got to watch your finale and it was very exciting. But before we jump into that, I want to learn a little bit more about you because you have a passion for helping entrepreneurs realize their true potential. What sparked this passion? Like, how did you end up in this place?
Yeah, very good question. I feel like one statistic that I feel like has a space in my mind is knowing that last year of all VC funding, less than 2% went to women-founded startups, and a total of $415 billion was invested into startups in North America. So 415, 2%, there's a huge gap in terms of who's actually getting capital and which entrepreneurs are getting capital. So it's really statistics like that I feel like spark my passion for helping entrepreneurs. I myself am an immigrant. I'm a brown woman. I've been the first of many things in my family, from the first lawyer to the first businesswoman to the first angel investor. And so I also feel like, in a personal sense, that is what fuels my passion for supporting entrepreneurs, for championing entrepreneurs, for setting them up for success, and really championing the people who are breaking the status quo and doing things differently. So when I think about entrepreneurship on a very foundational level, of course, it's a pain in the marketplace and then, a tech or some type of solution to be able to solve it. And that is what the driving force is behind innovation. So in supporting them, we contribute, yes, to their individual success and also to really the overall progress and evolution when it comes to different industries and sectors.
I love it. I mean, to me, the economy is an ecosystem, right? Like, this is the analogy that I use, right? But it is so dominated by, certain groups. For me, the whole idea of venture capital and associated with that is angel investing, right? That I really associate with, honestly, with like tech bros,
right?
And like millionaire founders. And this is, to me, I think so much of my experience with it has been like frankly misogynistic in so many ways. Like, I really echo that. And so, what you're doing is really bringing, that model, but to a much, much wider audience. So let you sort of explain to people, what is angel investing? Who can be an angel investor?
Yes. One of my favorite questions, because that visual that you painted for everyone of the tech bro, or kind of, someone who has money just to spend is very common when it comes to angel investing and what people think about when it comes to angel investors. That's definitely a way I felt. I very much felt like an outsider. There was a lot of jargon that exists in the ecosystem, and I didn't always know, do I actually have a place as an angel investor, and do I actually belong? So on a very basic level, angel investors are people who invest their time and capital into a company. And so they offer promising startups at different stages funding. And in coming to how do we reframe that visual of the tech bro or of the millionaire, two of the underlying themes of what we do at Spring is democratizing access to capital for founders and changing the narrative around who is able to build financial wealth and how. So something that I would encourage everyone on this webinar to even think about when it comes to certain prompts and questions that I like to really bring into the ecosystem is, what is the experience and expertise that you bring? So that's like one piece of the puzzle. What are your core values? Like, what actually matters to you? And then the third piece being, how do you want to use your capital and resources to catalyze change? I would highly encourage thinking about those three pieces when you think about who is able to angel invest. Can I be an angel investor? Is this something for me? Because I think that's what's going to start circulating and reframing this visual or idea very traditionally built in of what we think of as angel investor, and then how do we start to really reframe and change that narrative.
I mean, I love it so much. And there are two things that I love about it. Number one is experiential learning. That I think a big part of what you're doing is like teaching people about angel investing by giving them an opportunity to actually do it and to learn about it and figure it out. But then also encouraging this further dialogue. I think one of the reasons I think of like tech bros and millionaires is because they're the ones on Twitter or on LinkedIn, like posting about it and like, oh, I just 10x'd my investment. Look at all this money that I have. And I don't think enough of us are talking about money in a way that is more heart-centered, in a way that is more like, you know, with the emotional attachment of actually investing in a startup and watching them grow and thrive, and not just about the returns and the exit and the money you're going to make, but also supporting them and helping to build the type of economy that we all want to participate in. So, you know, you just wrapped up this Nimbus Synergies Health Impact Investor Challenge. This is an 8-week challenge that you just ran where you brought people along an 8-week journey. Can you tell us about that challenge?
Yes. Yeah. What a whirlwind, what a ride. It's been incredible. I love, Tim, that you were able to come to the finale. So when it comes to these 8-week challenges, they're really designed to be inclusive and accessible, catering really to both aspiring investors, so people who are impact curious, impact driven, and accredited investors. Something that, I've said on this call and I am a huge champion for all the time is breaking barriers and making investing education and participation more attainable for people who are just eager to learn and grow their portfolios. So we've really designed these impact investor challenges in a way to provide various opportunities, from understanding how due diligence works to how to evaluate early stage health tech companies. If I look at, the Health Impact Investor Challenge, to closing an investment. This program really takes you through that end-to-end investment process, which enables you to make investments that, yes, result in measurable impact and bridge connections between like-minded investors in the community as well. So it's really navigating the how and the why and the what of early stage investing.
I love it. I think it's so cool. Again, my perspective is that I think that so many of us in the social enterprise ecosystem need to learn finance, right? And so to me, I think you've created a really accessible, a really fun, a really engaging way of doing that. I did watch the finale where Tensor Health won the challenge. They were the big winner. So tell us about Tensor, just as a little sort of case study, and what they won at the end of that challenge.
Yes, super exciting. So 50% of Canadians and Americans suffer from musculoskeletal issues. And so what Tensor Health has done is they've really been able to create patented medical sensors that engage patients by measuring recovery status, turning exercises into games, and really dynamically creating and communicating the shortest recovery path to rehab for each patient.
Amazing.
In terms of what they won, I mean, when it comes to angel investing, yes, there is the monetary capital, but there's so much more. And so there is that, $100K investment. And also they're learning how to engage in a community of 20 aligned investors, 20 to 25, depending on the Impact Investor Challenge, gain visibility and exposure. So I think of today, they're going to be pitching to Van Tech. They're going to be pitching to Angel Forum later in a couple of weeks. So it's like truly invaluable when it comes to the founder. And I think that's so important to highlight. So I feel like I'm like still buzzing from the finale day. Yeah.
Well, that's pretty good. I would say 100K investment is nothing to sneeze at. I know the community and that piece of it's pretty good, but as an entrepreneur, I do see someone that said, what a ride indeed. You crushed the health tech challenge, investing challenge. So getting some kudos from the chat, from the Q&A, which is great. Love to see that. And really what I'd love to know is, like, now that you're through this 8-week challenge, that, you know, that what kind of feedback have you started to receive from investors? Like, really, how has their relationship with money shifted? I've seen people go through some of my courses and kind of go through this learning journey when it comes to really taking control of their money and investing in a way that absolutely aligns with their values. So I'd love to hear from you, like, what is that sort of like more like emotional or that relationship with money? You know, how has that shifted?
Yeah. So what a beautiful segue. Shout out to Tyson. Tyson was an investor. He was incredible in the program. So I love to hear that you enjoyed it. When the investor calling the shots starts to diversify, so will the capital commitments to founders of color, to women who are shifting the paradigm. So I feel like that's like a lot of words that I just said. When I think about the feedback, when I think about why these impact investor challenges are a success, when I think about what have investors said, there are investors, even within the Health Impact Investor Challenge, who had already participated in an impact investor challenge before, loved it so much, so they decided to do another one. That is like the true essence of why these challenges are so successful, because people want to do them over and over and over again. That's like one component. The second component I would say is, again, even speaking to the investors within this program, we had one person say yes, that one person told their friend who told their friend. So the idea of building community, of collaborating, of knowledge exchange is so inherent to what our investors talk about, why they love these impact investor challenges, and also to how their thought process around money is shifting. That if I can do it, my friend can do it, someone else can do it. So how do I tell more people about it so that collectively and as a community, we can really have the difficult conversations about money? And like you, and even just coming back to your question, shift out my relationship with money so that then someone else can shift their relationship with money in my network, in my ecosystem. And then again, just like, what are the ripple effects that that creates?
I love it. I mean, I find like often when I deal with clients, like there's such an emotional component to personal finance. And I find overwhelmingly, you know, especially with women, but with everyone, the dominant emotions are shame and guilt. And it's just like this terrible, like when it comes to money, it's like, it feels so icky and gross. And when I see people make their first impact investment, to realize that now all of a sudden they can infuse their money with intention and with love and with impact. And it just so changes that dynamic and imagining what's possible. And then to your point, I love this idea of then spreading it. I mentioned earlier, you know, I used to work with this framework of the river of money. And so early on in my career, my vision was to shift $1 billion towards sustainability, to sort of redirect that river of money. But I realized years ago, it's not about $1 billion. As big as it's like a drop in the bucket. The problem is our mindsets.
Right.
And so instead, I made the mission to help 1 million Canadians shift their intentions. And that's why I deal with such a retail audience, that it really is about impact investing for everyone, the democratization, what you're doing around the accessibility and the democratization of angel investing. You know, I can just get behind that so much because, you know, when people have that experiential learning, it is an emotional, like they just shift their relationship with money, and then you want to talk about it. And now all of a sudden, when you're talking to your friends and family about money, it's not out of guilt or shame. It's not, you know, greed. It's not about maximizing returns. It really is, can be this heart-centered conversation where you just want to share that. And I really think that's how we're going to shift our economy, that it's not about the dollars. The dollars are nice. You know, to your point, that 100K, you know, it was great, but it's really the community and the support, that social capital that we can start to shift and really changing people's relationships with their money. So I'm so in awe of the work that you're doing, and I love it. I think it's so awesome. And I really hope that, you know, through this conversation that people, you know, if there are people that came here for you, that know you and that know the angel investing world at Spring, really hope to expose those people to community bonds and to alternative financing models on that side, for people who came here for the community bond side And, you know, that's, I'd really hope to introduce them to this notion of angel investing. Because what I find is that, you know, the best sort of target audience for a sustainable investment is always people who have made an impact investment already. And if we can get people to not just make one impact investment, but to make many different types and to diversify their impact portfolio, you know, this is really how we're going to grow the overall ecosystem. So I'm just so honored for, you know, you and the work that you've done and for joining us today and sharing this story. Ashima is the investment program manager at Spring Activator. Thank you so much for joining us.
Thank you. Yes, this was great. Thank you, Tim. Thank you, everyone, for being here.
Amazing. So I'm looking at the clock right now. I think I'm going to fulfill my promise of getting people out at the hour. So, you know, just really want to say a couple final words. Thank you so much for joining. I can't tell you how warm my heart is. Before you go, I do want to announce that the Social Finance Forum has announced that they will be back on June 12th and 13th of 2024 with 5 in-person community hubs across the country. I have no idea how you're going to pull that off. But we will provide some information. TDAO with Future of Good and with the Social Finance Forum, we'll make sure that we provide a link to that early bird rate, because if you buy your ticket right now for next year's Social Finance Forum, I believe they're offering 35% off for the first 100 tickets sold. So make sure you get your ticket today. Maybe what I can do is see if I can quickly find the link for that, because I know everyone likes saving money, right? And I love saving people money. So apparently I can still post in the chat. I know that not everybody can, but I believe I'm able to. So I'm going to use my power for good. And let me see if I can post in the chat to everyone. Here is the link. There you go. Buy your tickets today. Make sure you are part of the first 100 people to get that ultra early bird rate, 35% off. So you know you're going to go anyway. You might as well just buy your ticket. So get yours today. I want to finish by once again thanking Tapestry Community Capital for sponsoring this. Tapestry, you've probably learned a little bit about them. If there's anyone in the audience who works for an organization who wants to issue a community bond and is thinking about that, Tapestry is like your prime source for information. For those of us in the crowd who are looking to invest, keep an eye on Tapestry does have a project page. We'll send that out in the email, but really want to make sure that that you can keep track of the wonderful community bonds that are on offer. There are a few that are available right now, including Propolis, and I know that there are more opening in the coming months, specifically around affordable housing. So if you're looking for a more ethical investment that will help to solve the affordable housing crisis that we're currently in, then keep an eye on that. Keep an eye on the inbox. T, thank you. It looks like you were able to post in the Q&A as well. Fantastic. Want to make sure that people are able to save that money. Thank you so much, everyone. I can't tell you how much it means to me that you decided to spend part of your day with us learning about social finance in this BC edition of the Social Finance Forum. Thank you so much for joining us. Keep an eye on your inbox. You will be getting an email from us as soon as this is up on YouTube. Thank you so much. Enjoy the rest of your day. Have a great day. All the best. Bye.